Hey, what's up, financial advisors? It's me, Sarah G with Smack, and I am back. And I feel like I am on the quest for the Holy Grail. When I try to talk to people about hourly planning, it's like this thing where every financial advisor I talk to about this gets like this attitude problem when I talk to them about hourly planning and how great it is. And they give these like crazy responses and launch into this whole Shakespearean sonnet about how it doesn't work. All right. So I actually have somebody here. Sarah Charles is an hourly financial planner, and she absolutely loves operating this way. She has tons of insights to share. So let's talk about how you can actually make hourly planning work for you as a financial advisor. Sarah, welcome.
Thank you. I love that intro. I can't wait to dive in.
So tell me about why you chose to be an hourly planner. Like, first of all, like, what is an hourly planner and why did you decide to be one?
Yeah. So, hourly financial planning is pretty much what it sounds like. We provide advice and planning to clients, and we charge for our time the same way a CPA would, or the same way an attorney would. By way of background, I spent almost 15 years at a traditional wealth management firm where we charged clients a percentage of assets under management. And that was the only model I knew for a very long time. And actually, my husband, Jim, who's my business partner, was the one who got interested in hourly. I shared an article with him maybe a year and a half ago from Bob Veery's called Don't Fear the Meter. And it talked about hourly planning, and it referenced the book A Matter of Time by Mark Berg. And Jim, it just flipped a switch in him, and he was familiar with hourly planning, but it had fallen off of his radar. And he read Mark's book and decided, oh my God, this is the right way to approach serving clients. So he had the idea to start this business as a path to come out of retirement. And I wound up joining him after the company I worked for went through a merger, and our paths just kind of intersected. And so last June, we launched Sanctuary, and all we do is hourly financial planning. That is it.
Financial planning. Now, do you do any investment management on an hourly basis?
We don't manage investments, but we do advise on them because investments are part of the planning process. So we will review client investment allocations. We will share our philosophy on how we think they should be investing and how we look at the world when it comes to investing. We will give them allocation recommendations. We can even help them with implementation. So the analogy I always use is if you've ever ordered an at-home meal prep kit like Purple Carrot or Blue Apron, they give you everything you need so that you can go into the kitchen and cook yourself dinner. And that's what we do. We give people exactly what they need. Here are the tickers, here are the percentages, here's how you do it, so that they have the capacity to go ahead and place trades themselves. And if they're really uncomfortable with it, which I totally get, the idea of placing trades can feel intimidating, we are happy to do a screen share or look over your shoulder and walk you through it the first couple of times until you build confidence.
One of the objections that most advisors have to hourly planning is the fear of waking up in the beginning of the month with no idea where the revenue is coming from for the rest of the month. Can you talk about how you manage that?
Yeah, and it's a real fear. I think one of the hardest, or one of the things to be aware of when it comes to hourly planning is it's hard. It's a whole lot harder than being an AUM advisor, partly because you just don't make as much money. However, in all of the research we did before starting Sanctuary, the majority of hourly folks that we spoke to have about at least 70, if not 80% of their revenue as recurring revenue. So Jim and I have only been at it for 7 months. We haven't gone through a year two where I can say, oh, this is what it looks like for us. However, we enter into every relationship stating very clearly that this is not transactional. We're not looking to just create a plan and then you walk off into the sunset. We talk about the fact that planning is a process, not a product, and we want to be with our clients throughout the course of their financial journey. So we expect there to be ongoing work, and that should lead to recurring revenue, which should help alleviate some of that fear about where is the next dollar coming from.
So talk to me, Sarah, about what it was like when you were starting out. When you originally just set up the shingle, so to speak, and had no clients, no revenue. How did you ramp?
We actually ramped pretty quickly because there's so much curiosity about hourly planning and there's actually a lot of demand for it out there. So as soon as we started reaching out to people in our network who we knew that this is what we were doing, it was like, oh my God, this is great. You do hourly planning, fantastic. And we saw interest from people we knew personally. We saw interest from COIs, attorneys, CPAs. We saw interest from other advisors, Sarah, traditional AUM advisors who have minimums, sometimes really high minimums, and are looking for an outlet for where they can refer people who are not a good fit. And maybe they don't want to refer to the local Edward Jones broker, but they're happy to send to a fee-only fiduciary planner. We saw a lot of interest from people who have been, I always say, disenfranchised by the financial services industry because they just don't have enough money, right? They don't have the $500,000 or the $1 million in investable assets. And we also saw interest from people who have plenty of money, but who resent paying those AUM fees in perpetuity, right? People who are like, why should I pay 1% of my portfolio to someone forever? And so we didn't necessarily go into this with like a big marketing strategy, but just a few simple LinkedIn posts and a couple of in-person meetings, and we were off and running.
How much do you charge an hour?
We each charge $450 an hour. And then we outsource to someone who charges $150 an hour as a planner, and then a paraplanner at $75 an hour.
Okay, so you charge 400 something, and then you outsource it to someone who is also a planner, but charges less than that. What does that person do exactly?
They do a lot of the data. The paraplanner does a lot of the data entry into our financial planning software, and then the planner can help with scenario analysis. And it's just an easy way for us to build out our practice without having to go out and hire a junior planner. The vision is that at some point we grow and scale the business and we bring people on at different rates.
How does that stack up with what the average hourly rate would be in terms of time spent on client relationship for an AUM advisor? Because if they're making 1% on $1 million portfolio, that's $10,000 a year. So that would mean 20 hours of work over the course of a year, roughly, at 400 an hour. So does the average financial advisor that's servicing the average $1 million portfolio put 2 hours of work in per client per month?
I mean, I suppose it's going to depend on the nature of the client relationship. I can tell you, if you're an advisor with 100 clients, I don't do math in my head very well, but I'm pretty sure you can't spend 2 hours per client every single month to get to that $10,000 fee.
Probably not.
Yeah, like it's nearly impossible.
So they're probably actually, so even though you say, oh, well, 400 is high, if you look at what's probably happening in the industry, there's people that are charging or putting your money into a TAMP and then they go golfing. And I mean, I know some people that will say that they don't even talk to their clients in a down market because it's a hard conversation to have. Okay,
right. And
so
that's when you should be talking to your clients, frankly.
Correct, but on an hourly basis, what does that equate to when some of these clients aren't getting butt kissed from their financial advisor? So yes, I would say that in the case that a client is really demanding and demanding a ton of the advisor's time on the AUM model, that probably comes out to 100 an hour. Then the AUM advisor is probably way lower than what you're charging. But I don't know how many of those really demanding clients the the AUM advisor is going to put up with. I don't, because of the way the AUM model works, I don't know if I think it self-selects. I think that the bigger clients, the advisor naturally pays more attention to. And so maybe more demand and need for time is created from those clients, but then they're making a higher per hour fee.
Yeah. And in my experience, some of my biggest clients required the least amount of work because everything was kind of humming along pretty smoothly. How much money you have and your level of wealth is not a pure proxy for what kind of planning or how much planning you need. And a big consideration is what's going on in your life. Are you going through a divorce? Are you thinking about retirement? Have you inherited money? Are you thinking about a big life change? All of these transitions, that's when you need to increase your planning. And it doesn't matter if you have $100,000 or $100 million. Transition is transition. The need for advice and guidance is there regardless of how wealthy you are. So I also think, again, when I say I know Jim and I charge a higher rate than industry average, I think there's a real problem where we discount the value of financial advice. And I think part of that stems from, as an AUM advisor, I really didn't know the value of my time because I didn't think about it. I just had this number, right? 1% of $1 million is $10,000 a year. And now you get all this stuff lumped in underneath. You get investment management, you get comprehensive financial planning, whatever that means. You have unlimited access to me. You can email me, you can call me. But at the end of the day, we do ourselves a disservice when we don't place a value on what we're actually providing. And that's why you have all these AUM advisors who are saying, here, let me give you a free financial plan to get you in the door.
The insurance agents do that too, right?
Yeah. Well, it's like the free steak dinner. It's like, let me discount this thing so that I can go after what I really want. And what you're doing is you're discounting the crux of the value proposition, which is the planning.
Yeah, I mean, I can't even tell you the amount of really smart, successful people that have contacted me. And they do tend to be more on the analytical side. I'll be real with you. I have these lists, flat fee advisors. By the way, if anybody's not listening to this, you're not on my list. If you're a flat fee advisor, advice only, hourly, contact me, please, and I could put you on my list. But I have these lists on Google. And so I'm ranking, and all of these really intelligent, like successful people contact me because they're sick of AUM. And they're analytical enough that they know. I mean, if you're talking to someone who's run a business for 30 years, sold the business, and it now has $15 million, you can't tell me that you're going to put this over on somebody, that they're not going to do the math and figure out, well, I'm going to be paying my financial advisor a chunk of change to manage my $15 million portfolio. And the truth is that most of the people in this person's area are charging commissions, which they don't even understand, and so they won't even deal with them. Or the AUM advisors, they just, by the virtue of the fact that they've inherently started at a disadvantage because they're demanding so much money from this rich person that it's hard for them to justify it. It's hard for the intelligent, really shrewd person to see that. And it's also like engineers. I've talked to people that have, I mean, it's mostly like, I feel the business owners and the engineers. If you talk to somebody like that.
We just brought on a new client that fits that description. And what they used to tell their advisor is, I've got a leak in my portfolio because of all the fees draining out every quarter.
Well, the other thing people say is, oh, well, I had a bad experience when I was doing hourly because I sent somebody a bill and they didn't pay it. It's,
You know,
I need it to be debited out of the AUM so I don't have to deal with this sloppiness.
and I think that out of sight, out of mind mentality is not good for financial health and well-being, right? We can talk about the lack of financial literacy in this country and the fact that, Gen Z and millennials, they don't even know what cash is. They just wave their phone and magically things get paid for. When you just take money out of someone's account, like that out of sight, out of mind is not ideal for good financial health. But yeah, is billing a pain? Sure. I don't love having to take, a few hours once a month to bill, but I do it. And at some point in the perfect world, I'll be able to outsource that or hire someone who can serve in an administrative capacity. And in 7 months, we've had one person question a bill. That's it.
Do you itemize on the bill? Do you say like, I did 3 hours today, I did 2 hours today at this rate, it came to this is the total for the day, this is the total for this day. Do you do that on your bill?
Not, but we break it down for the month. We say, here's how many hours for the month. Here are the things that were included. And I'll be the first to admit given that we're new to this and there's a real learning curve, we're constantly evaluating our processes, trying to figure out what's the right way to be fair and transparent with the clients and what also makes sense from an operational efficiency standpoint. So
I charge hourly for certain clients. I have people that are on retainer with me where I'm doing like blogs for them every month, and every month, it's like in continuum for years and years. Okay. But I have some people that they just want some service for a few hours a month for a few months. Here's what I did once, and this was like so crazy. There was one guy and he was kind of skittish about working with me hourly. So I said, here's what I'm going to do. I'm going to make a Google sheet. And every time I do some work for you, I'm going to put it on the Google sheet. And then I'm going to email you at the end of every week. So you can see what the total is by week and you can see exactly how the hours break up. Never had a problem from the guy. So, I mean, that was how transparent it was, that he literally saw it on the Google sheet.
yeah. And we've not had anyone ask for that level of transparency. And again, we're in a perpetual learning mode to figure out, okay, what's working well, what's not working well, what do we need to adjust. And I think that's just the natural evolution of being an entrepreneur and a startup business owner.
Yeah. Sarah, what would you tell somebody who wants to get into hourly planning but isn't sure where to start?
Well, as I already shared, being an hourly advisor is hard. I don't think it's as profitable as the AUM model. So you have to come into it knowing that, you don't just have this annuity stream. And there's so many myths to bust around hourly planning. I think the two biggest are that hourly is transactional. I see it all the time and it just makes me crazy when people are like, oh yeah, hourly planning is good if you just need like a one-off. Well, yeah, it is great if you need a one-off, and it's also perfectly reasonable for a long-term relationship. And the other thing is that somehow hourly planning is limited to people without money. And again, as I've already shared with you, I think the two groups we get the most interest from are people who are overlooked by the financial services industry because they don't meet the standard minimums, and people who more than meet those minimums but resent paying fees. And if anyone is considering hourly planning, they 100% ought to read Mark Berg's book, A Matter of Time. In the first chapter, he lays out, I think, 13 myths around hourly planning and how to counter them. So first of all, it's hard, but it's the great equalizer, because at the end of the day, you can work with anyone. If you're an AUM advisor, I know when I was an AUM advisor, I couldn't work with everyone. I had to turn people down, usually because they didn't have enough money or they weren't a good fit for the type of services we were providing. But I have yet to meet a prospective client that I can't help. And Cheryl Garrett, who pioneered hourly planning way back in the day, she talked about serving the unserved and the underserved. And that's one of the beauties of this model is you get to serve the unserved and the underserved. And it really democratizes how financial advice is delivered.
But do you think that's really true? Because if somebody has no savings and they're making like $50,000 a year, that person might need help with debt pay down or creating a budget or whatever. But if someone's billing, and I don't want to, to throw out their 400 an hour, right? Because that is a little bit higher than I normally hear planners charging. But even like 150 or 200 an hour, I don't know that that person would be able to pay a $2,000 fee, which would be 4% of their income for the year, pre-tax, right? The
Right.
gross
But
income. So is it really serving the underserved? In that sense? Because those, I mean, those people aren't getting any attention from anybody.
I think, are there going to be people who don't have enough resources to access advice? Yeah, I think you make a fair point. However, you can reach far more people with the hourly model than you can with any other model out there. Jim and I happen to have a 4-hour minimum. So at our rate, that's $1,800. But if we had someone on staff who charged $200 an hour, now a 4-hour minimum is $800. So can someone budget and save $800 the same way they would budget and save $800 to buy a new iPhone, right? Can they work to make that investment in their financial health and well-being? I'd like to think that they could. And again, I realize we're not for everybody with where we are today. But if I look at hourly planning on the whole, I do believe it really does democratize how financial advice is delivered and really increases accessibility so that more people can get the guidance they need to get those questions answered, take control of their financial health and well-being, and have the confidence to know that they're on track.
Well, yeah, because if somebody, for example, has high income, but just can't ever save it, what is that person going to do? An AUM advisor is not going to be able to help them. And financial planning is what they need help with so that they can accumulate the assets. So I do see how it could be really useful in situations like that. Or business owner that hasn't cashed out yet, is making high income and could afford a service like this. But an AUM advisor is going to be like, well, if you don't have $1 million, there's no use talking to you. But yet that business owner needs so much help.
Absolutely. Small
to
business
get
owners,
to that before they even get to that point. So I definitely see where you're going with that.
Yeah, small business owners are building their wealth in their business, not their brokerage account.
Right.
But they've got questions and they need answers.
Or real estate. Someone that is like has a lot of real estate, for example, or even has a lot of money in a 401k and is making a lot of money or has money in stock options, all of these scenarios. I think our industry has yet to figure out how to serve the truly, I guess you would say, underserved.
So what Jim and I always talk about is moving beyond AUM. It's not about moving away from AUM. Unlikely that AUM is going to disappear anytime soon. However, how do we move beyond that to increase accessibility? And there's hourly is one way, as you have pointed out, increasing the scope of advice that 401k participants is another way. Financial literacy programs, which is, I think, oftentimes when you talk about people who need help with budgeting, need help paying down debt, the first step is for them to get their arms around the financial basics. And then the next step might be planning. So how can we increase these resources?
Even that little bit of financial advice. I mean, maybe someone can only afford $1,800 of financial advice once every 3 years. Sarah, the fact that they came in and sat with you and talked to you, maybe that put them on a better path. You never know how that could have impacted somebody. Some people are so helpless. They live in fear. And just the fact that not just to have their money put in a product, whether or not it grows, right? But not to have a product pitched at them, but to have a human interaction with somebody that can talk through these things with them and has helped them make sense of it and put them into a better mindset and maybe change their attitude. Maybe that is even the value of, maybe there's a, maybe that is where hourly could really have an impact.
Yeah, and one of the things we have adhered to, and again, this is following Mark Berg's advice because I think he's the most successful hourly planner, or certainly built the largest, most successful hourly practice in this country, is we don't discount our rate. However, we have offered clients the ability to change how they pay us so that it works in their budget. And we do some pro bono work. And that's, I know the CFP board is, I think, encouraging more pro bono work across the profession. And it's really great that we have the ability to make that part of how we practice and who we serve.
Amen to that. So Sarah, I'm going to wrap here. Thank you so much for coming on my show and telling it like it is. How can somebody reach you if they want to reach you?
They can reach me at sarah@sanctuaryfp.com. I'm on LinkedIn at Sarah K. Charles. I'm on Instagram at sanctuaryfp_Sarah. All the usual haunts online. And I would love to talk to you because whoever's listening, we are so passionate about this model and we are so passionate about hourly planning. And if it's even in the back of your mind, like, should I even consider it? Then give me a call and let's chat because I will happily share as much as I can to convince you that this is a really great path to go down.
And and it's not even like you got to go down the path exclusively, because I know so many clients of mine, and I'm not just saying in one or two cases, I'm saying across the board, the AUM advisors that I work with are consistently hearing from people that are saying, I don't want to manage the assets. I just want a financial plan. Can you do that? And so I just really think everybody listening to this should consider some type of an hourly or equivalent to hourly rate on a flat fee basis, but just not managing the assets. All right. Consider this business model. Okay. Because people are asking for it more and more. And with that, I'm going to wrap. Sarah, thanks for being here, everybody. Please rate, subscribe, and review this show, and we will see you in the next one. Thank you.